Hey everybody, how are you doing? Good afternoon or lunchtime. Yeah, thanks for coming out today. Weather's not the best. Hopefully, you're in a place where you're not going to have to move too much as we're preparing for this crazy snowstorm. But with all that aside, my name is Alex Sani. I am the industry coordinator here at Manitoba Music, and this is part two of our two-part financial workshop series here at Manitoba Music called Demystifying Income and Sales Tax. I'd like to recognize that Manitoba Music was founded on Treaty 1 territory, which is the original lands of the Anishinaabe, Cree, Oji-Cree, Dakota, and Dene peoples, and the original homeland of the Métis Nation. And I'd like to recognize the strong Inuit community here in Manitoba. Manitoba Music respects the treaty in which our organization resides, and we commit to moving forward in partnership with Indigenous communities in the spirit of collaboration and reconciliation. So, I mean, wow, where do we go? Budget and bookkeeping, not always the most fun, but last week we had Catherine Kerr from Tonic Financials come down and really break it down for us, demystifying the budgeting and bookkeeping. And now, like I said, this is part two of the series. So we're really happy to have Catherine here. Catherine, jump on screen.
Hello, everybody. Here
Hey,
I am.
how
Thanks
are
for
you doing?
having me back. I'm good. I'm staying inside. I have not left my house. Oh no, I did. I went for a walk this morning, but I survived with my dog. But yeah, we're hunkering down.
So last week we spent time with the budgeting and the bookkeeping, and you broke down a lot of really easy step by step things that we can do, separating out the like having different accounts if we can do that and things like that. This week we're looking at the income tax side and the sales tax and
and
everything.
sales tax. Yes. So we're going to go into both systems and try to answer as many questions as I can for those two topics. If you are asking questions more about budgeting and bookkeeping, you can watch last week's presentation on Manitoba Music's Facebook and YouTube, right? So I highly recommend that as well. And yeah, we're hopefully, I was joking on my Instagram. I'm like, I hope this won't be as cold and dull as the blizzard outside. I promise you, I will make it as exciting as possible. I know people don't like talking about income and sales tax, but that's why we're here. We're going to break it down really simple. And hopefully you'll go away, less scared of it.
I definitely would also double down with that and suggest that if you didn't see part one, please watch it. It might not be something that you think you need, but you definitely do. And if you already know it, it's a great refresher. And Catherine does a really great job of simplifying everything. So I'm going to sit back. I'm going to get out my notepad. I literally, actually, this time have a notepad to take some notes. And my pen.
Nice.
I lost my pen. No, I have my pen right here.
Right.
I'm going to hop off the screen and I'm going to write down some notes, and this is going to be great. Before we get started, this is a perfect time for actually, Catherine, where can we reach you to get some of your professional services if we wanted to go further?
Yeah, so I run a bookkeeping and consulting business called Tonic Financials. It's catered specifically towards musicians, but also for any other artists. I do a couple for nonprofits, festivals, kind of just solo entrepreneurs in general. And my focus, I try to focus a lot on like client education and empowerment around financial info. So I encourage, learning DIY practices. And I know artists sort of don't have a lot of money to outsource, but financials is an area that sometimes you want to outsource a little bit. So that's what I'm here to help with. I'm a musician. That's how I got into this. So I play in a bunch of bands, and I started this company because I really saw a gap sort of in the industry for this information. You can talk to accounting professionals, but sometimes they just don't have an understanding of what musicians face when it comes to money and money management. So yeah, that's a little bit about me. And I will have when I have my slides up, I have my contact info and all that. And once again, it's Tonic Financials, so they can find me there.
Mm-hmm. Perfect. This is my favorite part of these talks, where I get to hop off the screen and just be an observer and learn all the great stuff. So I'm going to do that. I will be back at some point, but right now I give you the floor, virtual floor.
Awesome. Thank you so much.
All right. See you.
Alrighty. So I do have Isabella helping me in the background for the tech. Could we put my slide as a small little window like we had last time? Oh, now I'm small. We'll get there. There we go. Okay, and now I'm going to move around so you can actually see me. That's better. So like Alex mentioned, we're going to be talking about income tax and sales tax. It's kind of a big topic, so I am breaking them out into two. As I said, here's my contact information. You can reach me on Facebook or Instagram, and my email is catherine@tonicfinancials.com. If you do have any questions about what we're talking about today, you can always email me after the presentation. So the four main topics that I'm going to cover are, we're going to go over just what the tax system is, the difference between sales tax and income tax, the concept of write-offs or writing off your expenses and recoverables, and then year-round tax prep and why I think that's important and maybe how to start doing that. Hopefully this can be a little bit more of a casual presentation. If you do have questions, I can see them in the chat, whatever platform you're watching from. So feel free to ask questions while I'm presenting. I will either get to them, put them in as it's applicable, or we can get to some questions at the end. So let's get into our first topic, which is the tax system. So mainly I'm going to be focusing on Canadian tax systems and Manitoba tax systems. The two systems that you're going to encounter are income tax and sales tax as a musician. Obviously, there are other tax laws that you're going to encounter if you're touring internationally or if you're going across province. We're mainly going to discuss Manitoba and Canada because this is sort of supposed to be like a general breaking down intro, and it gets pretty complicated. If you have questions as you go about international tax, feel free to ask them, but I might be able to answer them just separately from this. So these are the two systems, like I said. We're going to talk about income tax first and what that is. Income tax is that a portion of your income is taxed by the federal government at a certain rate, and then the government collects that money and uses it for services. During your income tax, you also may be eligible for certain deductions or tax credits, and that can result in a rebate instead of tax owing. So sometimes you may file your income tax and you get money back from the government. Sometimes you owe them money. Then the two types of sales tax that we're going to deal with specifically in Canada and Manitoba is the goods and services tax. That's GST, a federal tax. And then there's RST or PST. It used to be called provincial sales tax. Now it's called retail sales tax. And that's a provincial. So like we mentioned, income tax, a portion of your income is getting taxed at a certain rate. Sales tax, that's an amount of money calculated as a percentage that's added to the cost of goods and services when they're purchased by a consumer. And the way this works is you as the business, you're holding that amount on the government's behalf, and then you're giving it back to them at a set time. So this is something I think people sort of overlook or they don't really understand. You as the business, as a small business, you're not paying the sales tax. You're merely holding it on behalf of the government, and then you're giving it to them. So as a side note, this is why I recommend when you do start charging GST and PST, raise your prices, because if you are getting taxes rolled into that amount, you're now making less money. So, if you're charging $20 for a t-shirt now, and then you start charging PST and GST, and you're still only charging $20, you're now making less money. So just try to keep that in mind. And we'll talk about the requirements for both the tax systems later on. I like this quote. Some of you may have heard it. It's attributed to Benjamin Franklin, but I think it's been said before. But in this world, nothing can be said to be certain except death and taxes. So unfortunately, taxes are an inevitable, system that we're a part of as people living in Canada and as musicians. And I get a lot of questions about, well, what happens if I don't file my taxes? If I don't collect sales tax, what happens? The three things that will happen is most likely you're going to be charged interest. If you don't file on time and you owe money, the government will charge you interest on your amount. So you will end up paying more money. You also aren't able to collect your GST credit if you're eligible for that, personal amounts. Sometimes the government will put in like $100 to your account. It's a GST rebate. You can't get that if you're not filing your income tax. You also won't be able to collect your child tax benefit if that's applicable to you. So there are penalties for not paying your sales tax or your income tax amounts. And just keep in mind, the longer you leave it, the more stressful it's going to be. And this is why it's important to kind of get the basics, a basic understanding, deal with it when it's due. It will save you a lot more headaches in the end. Another question that I get pretty often is, does this apply to me, even if I don't have a business number? Let's say you're a musician, you're just starting out, and you're like, okay, I think I'm self-employed. I don't know. I don't have a business number yet. What does that mean? The short answer is yes. You can still file income tax as a self-employed musician, even if you don't have a business number. But you will need a business number eventually when you have to register for GST if that time comes. And I personally just recommend that you get one. If you have questions about how to register as a business, you can email me. But the way you would do it in Manitoba is contact Companies Manitoba's office. They give out business numbers in Manitoba, and their website is a little bit dated and it might seem a little confusing. I say this a lot. You can always call them. Like, these organizations, they have people on their staff that it's their job to know the rules, and it's their job to help small businesses like you. So if you get totally lost, just call their office. That's what they're there for. So that's the short answer of the question. If you don't have a business number, you absolutely still can file your taxes, and these systems will still apply to you. So now let's get into more of the specifics on what sales tax is versus income tax. And I'm kind of rolling a lot of information all into one category. That's why I want to make it really clear what the difference between these two are. And before I even get into those, I just want to review a couple terms that you might hear when you're either talking to accounting professionals or bookkeepers, or what I'm going to talk about in my presentation. And that's the difference between the terms employment income versus self-employment income, and then accounting income versus taxable income. So employment income, you might hear that term when you're talking about a T4. So you're employed by someone, you're getting a T4, that income is already, it's got the taxes taken off, it has other deductions taken off. That's your employment income. Your self-employment, that's your business income. So that's anything to do with your music. If you're a sole proprietor or a partnership, that's also going on your personal tax return, but it's going in a different spot. And obviously that income doesn't have taxes taken off of it. So that's why we're reporting that on our personal income tax form. Then from this term self-employment income comes these two terms, accounting income versus taxable income. So your accounting income, it's going to include a lot of different activity. It'll be anything to do with your music. So things you're buying, money that you're collecting, things that you're paid for in advance. That's your bookkeeping. It's your books. That's what we call your books. And in this case, when I'm talking income, I'm actually talking about income and expenses. Anything that's going in and out of your business, that's your accounting income. But there's different rules that the CRA and that the government has about what you put on your tax return, what information is on there. And often you'll hear people saying, what you can claim, what you're putting on your tax return. So I'll give an example of this. One common one is meals. If you buy a meal for your band, let's say while you're recording, that whole amount that you pay, let's say you spend $100, you take everyone out, for lunch during that day. Obviously that $100 that you spent is gone. You spent it. It's 100% a business expense because it doesn't exist anymore. You've paid the restaurant. On your tax, however, the CRA only allows you to claim 50% of that bill as an expense on your tax return. So on your taxes, it'll say that you only spent $50. So you can see already how the end amounts, that end of what you actually finally made, will be different on your accounting income versus your taxable income. Another example would be like something you were prepaid in advance for. Let's say the project hasn't started at all. You got prepaid for like this giant grant. You haven't been able to spend any money towards it. You haven't been able to do any activity towards it, but you already have the money. So it's already in your books. It's on your accounting income, But your accountant or your tax preparer, they can decide to move that amount and report it in the year that the project actually takes place. So you'll be paying less taxes, in this reporting period because that income won't be on there, but you'll pay it later in the year that you do claim it. So right away, you can see the difference between accounting income, that's all of your activity, and then your taxable income. That's just what you can claim on your taxes. And the reason why I'm bringing this up is I just want to remind musicians that your taxable income, it doesn't always reflect what your actual self-employment business is doing. It's really important to still do your bookkeeping, still keep track of everything, and you want a true idea of what your revenues and what your expenses are. And you can't really rely on just your tax return to give you that data. And I know that a lot of musicians think of bookkeeping as just a means to an end for tax time, but that's not why we do bookkeeping. In my last presentation, I gave some examples of just how bookkeeping can help us, and it can help with knowing where you're at with your bandmates, or reporting for grants, or making personal budgeting decisions and stuff. So this is just a reminder that we're not just doing our bookkeeping to file our taxes. Taxable income doesn't always reflect what you've actually been putting in and what you've been making and putting into your business. So hopefully that clears up some terms. So now let's actually start talking about income tax. So like we mentioned before, that T4 scenario, when you get a T4, the tax is already coming off your income. And then when you file a tax return, you're just making sure that your employer took off the right amount. When you're self-employed, you have to do that calculation. You have to say, oh, this is how much money I made. This is how much it should be taxed. And just as a little quick chart, this is a super simple, display of how income tax is calculated, but let's go over it together here. So this is for your self-employment income. So you make your gross income. That's that total amount of income that you've made. Then minus your expenses. So whatever you spent, for your music business. And that's when you get your net income. Then you take your net income, you're going to put that on your tax return, and then there may be some deductions that you can claim. The government allows certain deductions. There's different tax rules about how much money you're claiming as expenses, or what you can write off as an expense, or what you're reporting as income. So different changes are happening with deductions on your tax return. And then you come to that word, taxable income. So that's what money is going to be reported and the tax rate will be applied to. Then your taxable income gets multiplied by the tax rate, whatever the current tax rate is for the federal tax rate. You're going to either add or subtract any tax credits that you're also eligible for, and that is how you get your tax owing or your tax rebate. So obviously you can see there's a couple different steps, and there's different deductions involved, there's different credits involved, and this is why it's really important to do your bookkeeping, track info all the time about what the details are on your transactions. You either have to take a little bit of time to research some of these ideas, some of these deductions and credits, so that you can do your taxes on, something like TurboTax or software like that, or you hire a tax professional, or you hire me. I don't do tax returns, but I do tax preparation, and then would send to a CPA or a tax professional, because it's their job to keep up with all of these different tax rules that are changing every year. They know what are deductions, they know what credits you're eligible for, they know what type of expenses that you're allowed to write off. So that's why I think it's really important. This might be an area that you do outsource and that you do spend a little bit of money paying someone. because it'll save you in the long run, I think, because there's just so much information. Like this chart is an extremely simplified version of how your income tax is calculated. So I get this question a lot when it comes to income tax and just what's being written off and what you can claim. Is grant money taxable? So the short answer is yes, but there's an exemption amount. So I'm going to read exactly what the CRA has about their exemption amount. So artistic project grants received separately or in addition to other scholarship income that was used in producing a literary, dramatic, musical, or artistic work, other than a grant received for work completed as part of a business or employment. So that would be like, business income, employment income on a T4. You may claim the scholarship exemption amount, $500, to reduce the total amount that must be included in your income. So if you get an $1,000 grant from Factor to create an album, you can put that you only made $500 on your tax return. So this is another example of how your taxable income is going to be different than your accounting income. And again, this is a good example of why you might want to hire a CPA or why you might want to get a tax professional to do your return for you, because they will know this. This is one of many different things that you kind of have to know those little details in order to get the right amount at the end. And there's a lot of things that I think apply to musicians that that you're going to maybe miss if you were trying to do them yourselves and you hadn't done the research yet. If anyone has any other questions specifically about like what's going on in your income tax, we're going to get into write-offs next. But if there's any income questions, feel free to put it in the chat and let me know. But this is a big one that I think people ask about a lot. So another couple points about income tax is, as sole proprietors or partnerships, our tax year is always going to be January 1st to December 31st. You'll hear words like fiscal year. It applies more to incorporated companies, and they file separately out of their personal tax returns. It's a different return. So your tax year, for most of you who are sole proprietors or partnerships, will always be January, December. And this is something I feel like people often don't realize. If you're filing self-employed taxes, your deadline isn't till June 15th. A lot of people think that it's that earlier deadline. That's just personal tax return deadlines. So if you're self-employed, your deadline isn't until June 15th. So if anyone hasn't filed their taxes yet, that's okay. You still have time. So I think you should get started on it and then you'll be good to go. But yeah, you do have time. So that's just sort of a little rundown of how we interact with the federal income tax system. Now we're going to talk about sales tax. So like we mentioned, there's goods and services tax, that's federal, it's at 5%. And then in Manitoba, we have PST or RST, and that's at 7%. So that's a sales tax that is usually on tangible goods and only some services. So there's not a lot of services that are actually that you need to charge RST on. In some other provinces, they don't have sales tax at all. They don't have provincial sales tax. Alberta doesn't have provincial sales tax, and the northern provinces and territories. And then other provinces have a combined tax called HST. So when are you registering and charging GST? You are registering if you make $30,000 in gross income over 4 consecutive quarters or less. And when I say 4 consecutive quarters, it means like, not just January, December, and then it resets. Let's say you made, $20,000 in Q2 and $20,000 in Q3. And, you have to move it as it goes along. It can't just be, okay, January to December, and then it resets. It's for any 4 consecutive quarters. Or let's say you make 30,000 in 1 month. Obviously, yes, then you're registering for GST, and that's gross income. So money that you made before you took off any expenses. This is a big point. So you're registering when you hit that 30,000 mark. Do not charge GST before that. Don't charge it if you're not registered. You do not need to collect it. You don't have to collect it for yourself or for the government or anything. A lot of online platforms now, like Stripe or Square or Shopify, they'll just ask you, oh, what province are you in? Okay, here's the tax. So you do need to like just turn that automatic thing off, because it's going to ask you, oh, it's just going to assume that you're making that you need to file GST. But I think that a lot of musicians don't hit this threshold right away, and some of them are already, charging GST. So that's something that you should watch for. I do see a question about, do grants count for that gross income? Yes, they do. But it gets a little bit confusing, because sometimes grants stretch over periods of time. And so you can sometimes make a case that you got a grant that was stretching over that 4 consecutive quarters, like that it was for activities for, let's say, 2 years. I've also read, it's a little bit confusing, because I've read some non-CRA websites that talk about, what counts towards like musician gross income. And I actually read a couple sites that say grants don't count. I can't find anything on the CRA website that says that that's true. Once again, like, I'm not a tax professional. I don't file income tax. The best thing to do, if you have big questions about that and you're bringing in $100,000 worth of grants, you should call the CRA. You can talk to a person, whatever they say, that's what you're going for. I think this is sort of a general disclaimer whenever we're talking about sales tax or when we're talking about income tax. If you're making over $30,000 in general, or you're doing $10,000 in taxable sales for sales tax, which we're going to look at next, you should be talking to an accountant. So and they'll be able to, answer those questions and sort of move your money in a way that makes sense for what your activities actually are. So my answer is yes, they count, but you can call the CRA and confirm that. And also, if you're making over $30,000 in general, I would say it's time to get connected with a CPA and call the CRA and make sure that you're being tax compliant. So hopefully, I know that's sort of a non-answer, but it's so specific. Like, if you try to go on the CRA, it's not like they have a bulletin that says, these are the rules for musicians. You're wading through a lot of information that's applicable to other industries. And so that's the information that I've been able to find so far. So once again, you're only charging GST if you're registered. And the way you're going to register is through the CRA. And then they're going to either get you to file annually, quarterly, or monthly. It kind of depends. If you've been really compliant before, then they'll maybe do annual. If you're late on things, they'll make you do quarterly, which is really annoying. And it also depends on how much you're bringing in for GST. So now, what are we collecting GST on when you are registered? Performance fees. So playing shows, you are charging GST on that service. Selling merchandise in Canada, clothing, albums, all of that. And then other music services. So if you're doing a workshop, if you're doing audio producing, you're charging GST. There is a big exemption for this: music lessons. If you give music lessons, you do not have to charge GST on them. So I know a lot of musicians also do lessons on the side. That income is exempt. You do not charge GST on that. So that's the lowdown of GST. It's once you're on the CRA website, it's quite easy to file. But we'll get more into that when I talk about the next section about writing offs and recoverables and stuff. So that's something that I do in my business as well. I know it's something that people struggle with, is their GST or their PST filing and returns. So that's something as Tonic Financials that I help with. So if you have specific questions or you feel like you're really stuck with this, shoot me an email, and that is something that I offer. So let's talk about RST. When are we registering for RST? This is a little different. It's when you make over $10,000 in annual taxable sales. So sales that would have RST on them. You're only charging RST once again if you're registered. Don't put PST on things unless you have a PST number. And the way that you're registering with this is you go on something called Taxis. That's their online kind of portal that we have in Manitoba. And once again, they'll get you to file annually, quarterly, or monthly. So what are we charging RST on? Mostly, like I said, RST is for goods and some services. So pretty much for most musicians, all this includes is merch in Manitoba, clothing, albums, goods. I would say that the best practice that I've seen is make sure, once again, that all of those platforms you're using doesn't have the tax automatically turned on. Square, Stripe, whatever you're using when you're touring. If you're not collecting PST, or if you are, but then you're going to Ontario, make sure you have an option of turning that off, because you don't want to be charging taxes that you're not registered for. And again, with my disclaimer, I know I'm not talking about other provincial sales tax, because it's a whole other, every province has different rules about when you're charging RST and what you're charging PST or HST on. If you're making $10,000 worth of merch sales in other provinces, my advice is you should be talking to an accountant or a tax professional or the CRA. And you can always call them and ask if you're compliant and, ask the specific details. Because you're not going to find a bulletin that says this is exactly what musicians need to do. You're always sort of sifting through information that's for so many different industries. So if you're making, and also with a big paper trail, I say if you're making $10,000 of merch sales in a different province, but also if it's provable that you're making $10,000 worth of merch sales. I know it gets a little gray. People are doing a lot of cash transactions when they're on tour. If you're worried about it, you should start talking to someone. But I don't have, personally, most of my clients are not registered for RST because they're not making $10,000 worth of merch sales. Okay, so that's RST. That's the only things that we're charging RST on. And just as a reminder, you're not putting RST on services, and you're not putting RST on music lessons. So just be aware of that. So if anyone has any more tax questions, keep writing them in there. So that is just a little overview. I tried to simplify it as much as possible with the two big tax systems that we're interacting with as musicians. And the next section we're going to get into is, I've also kind of rolled it all into one big ball, and we're going to talk about write-offs. People say this word a lot: tax write-offs and recoverables. And when I say recoverables, that's sort of the section that we're going to get into about sales tax. So the first one, when I say write-offs, we're talking about what expenses we're writing off for our income tax. I think that a lot of musicians, this is why they do their bookkeeping. They think they're doing their bookkeeping just to keep track of the write-offs that you have for taxes. I would say we're doing bookkeeping for other reasons too, but yeah, this is a big portion of it. Because when I say write-off, it means it's getting counted against your total income. You have your gross income. Here, I'm backwards on my screen. You have your gross income. Then you have your expenses that you spent, doing your business activities. That gets taken off. And then you have your net income, and that's what you're getting taxed on. So the more legitimate expenses you can find that exist for your business, the lower your tax bill is going to be. And a lot of musicians are underreporting just how much they spend. I mean, we put in so much of our personal money, our personal time, without even thinking about it. And a lot of our personal expenses, even in my opinion, are sometimes business expenses. I'm going to go into a list, actually. Yeah, let's get into that now. So this is, maybe we can make this screen bigger. This is sort of an excerpt of one of the, and it's, oh yeah, perfect. Thank you for moving me. This is a little document that I send out to my clients just about what receipts they should be saving. Expenses are on the left-hand side here and income's on the other side, but let's talk about the expenses. So these are some categories that are going to be eligible as write-offs on your income tax. So they're counting against your gross income. Obviously, music gear, anything that you buy for music gear, strings, reeds, if you're a horn player, just all the music gear, rent on your jam space, advertising expenses, Facebook ads when you hire a graphic designer, when you do photo shoots, hiring session players to play on your records. We'll go over the asterisk ones after, I think. So accounting fees, when you do call that accountant, when you do, pay the tax preparer, that is all a business expense. Membership and union dues, if you have to get visas for going to the States, I would say even, okay, you have to renew your passport. That's a business expense. You need your passport if you're going to travel. Any subscription fees, domain fees, when you're paying for DistroKid or your website. And like I said, subscription fees, I think some of those personal expenses could be business expenses. Like, do you have a Spotify account that you're paying? You have to keep up on like music research as a musician. I would include that as a business expense. When you're buying music software, plugins, a new computer, these are all things that make your business work. It helps your music career. If you can apply it to something in your music career, track it. If you're totally off, your accountant will know, but you do have to track it, and you do have to get good information just about what it was that you spent the money on, what the vendor was. If you have questions about how you can save your receipts, I would recommend once again that you watch our last session. That kind of went into more details about how I like to keep my receipts and what information you do need to keep. The CRA requires you to keep this for 6 years. It's a long time, but you can be audited back 6 years in the past. They do accept electronic though. So you can have all of this scanned, you can have pictures of it. Just make sure that you have it in an uncorrupted format, something that you can actually access, like that they can access or you can access at a different time. So yeah, those are some big ones. Oh, let's actually go back in and talk about the two sections that I have starred. So food during recordings or band meetings. And this is what I ask my clients to make sure it's a business expense. Was the meal just grabbing you lunch, or was it official business? So this is how the CRA defines it. Costs you incur to earn business income. So that means your meals have to be business related. My advice is write on the back of the receipt who you met with, what the meal was for, and then you'll be good to go. If your band is meeting and you're talking about where are you going on tour, or who's booking the next show and what do we need to do for advertising, absolutely that's a business meal. Are you also talking about other stuff? Probably, but that's fine. Write it on the back of the receipt. And this is an example of what we talked about before, about 50% of it only is going on your income tax, but you still need to track it. It's still important to track. The other ones that I have starred are your cell phone and your internet bill, or your vehicle expenses. These ones often are also personal expenses. And so you'll work with an accountant or a tax professional, and then you'll decide what portion of that is a business expense. Personally now, because I have a bookkeeping business and I'm a musician, I write off 100% of my internet and my cell phone bill, because a lot of what I do now is either related to music or related to bookkeeping. So I think that that's fair. I really do need a cell phone to run my business. I'm virtual. I need a really strong internet connection to run my business. So that's something that you can ask your tax professional. And I just like to reiterate, you don't have to know all these rules as a small business. You just have to track everything so that when you do bring your information to someone, they can have enough data that they're making these decisions for you. Yeah, so those are some of the write-offs that we're using. And hopefully that's clear. I mean, I think that that word gets thrown around a lot, and not a lot of people, sometimes people don't know what we're actually talking about when we say write-offs. It's just your expenses that are going against your gross income so that you pay less income tax. So that's what we're talking about when we say write-offs for income tax. Now we're going to talk about what I mean by recoverables. When you're registered for GST, there's a term that you'll hear, and it's input tax credits. And that is a recoverable for GST. So ITCs, input tax credits, they're credits used to reduce your total tax due. So you're collecting a certain amount of taxes on behalf of the government. Anything that you spend that you paid in GST, that counts against the total amount, and you'll pay less taxes back. So, and here's a good note. You can claim input tax credits for taxable supply or zero-rated supply. Taxable goods or zero-rated goods, not exempt goods. So here's a nice example. You're buying strings as a musician, and you're paying GST on those strings. The amount of GST you paid, that's an input tax credit, and it'll be subtracted from the total amount of GST that you're giving back to the government. The idea is that GST is for consumers, and as businesses, we shouldn't be taking on the tax burden. So we want the GST to be paid by the end consumer. Now, like we talked about before, music lessons, those are exempt. We're not supposed to be charging GST on those. So that would be exempt good. And in this scenario, okay, you're buying a whole bunch of music lessons books. Those are all going to be given to your students, and you pay GST on them potentially. You cannot use that as an input tax credit because it's for an exempt supply. So hopefully that makes sense. This is another reason why it's really important to do your bookkeeping, track your receipts, and track what GST you paid, because you're going to be paying less GST. It's a recoverable. So there might be some months where you paid a lot of, you bought a lot of gear, you were paying a lot, and maybe you didn't have a lot of gigging activity. You didn't have a lot of, services that were GST. You weren't collecting a lot of GST. You might then get a rebate that month. So sometimes you'll pay the government in their GST money that you collected, and sometimes you'll get money back. So it's really important. This can really keep your GST bill low, not bill, I should say, your GST amount owing low. If you track your ITCs properly, this will really help. So that's a recoverable that we have for GST. Now I'll talk about RST recoverables. I'm putting them in quotations because RST is actually not a recoverable tax. But there are two ways that sometimes your RST amount owing will be lower. The first way is commission. So the provincial government actually gives you a little tiny bit of commission money. They're like, oh, thank you for collecting the tax on our behalf. Here's $50. It's not that much, but it's something. And that will get calculated on your return for you. It's a percentage. So you're going to be getting a little bit of money back from them just as a, okay, thank you for collecting the tax. The other way that sometimes your RST amount owing will be lower is if you paid RST in error. So kind of the same concept with GST and it being for the end consumer. If you're buying goods that are then going to be turned into goods for resale, you shouldn't pay RST on those goods in the first place. The end consumer should be the one paying RST. So a really good example is t-shirts for merch sale. If you buy a whole bunch of blank t-shirts from, Floodway or Gildan or wherever you're buying t-shirts from, and then you go and you put different screen printing on it and, you modify it and then you sell it in your store, you should not have paid RST on those t-shirts when you bought them. What you really should do, what the provincial government wants you to do, is you quote, so I'll just read this from my end because I know you can't see this all. But when you purchase goods and services that should be exempt of RST for resale, vendors are supposed to quote your 7-digit RST number to the supplier. So you should give Floodway or whatever company, you should give them your RST number and say, I'm RST exempt. These are for resale. And then they won't charge you RST. But in situations where the vendor has paid RST in error on exempt goods or services, and you're not able to get a credit from the seller, So I don't know who would do this, but I guess you could technically go back to Floodway, for example, and say, hey, I shouldn't have paid RST. Can you give me that money back? I don't know anyone that's done it that way. But anyways, there's two options. You can either recover the credit for overpaid RST by doing an internal credit adjustment on your return or a refund claim. I've done the first one for my clients. My client bought t-shirts and then resold them, but they paid RST on the t-shirts initially. So when we went and filed their RST return, I just adjusted it right on the return. I just subtracted the amount of RST they paid in error off the return. So it's not really a recoverable, like I said, but this is just two ways that you should keep in mind that your RST bill can get lower. And it's also something to keep in mind when you're, especially for merchandise items, when you're buying merchandise items that you're then going to resale, you shouldn't be paying sales tax. You shouldn't be paying provincial sales tax on it. Okay, it's a lot of information about sales tax. It's a lot of information about all the taxes, I guess. So keep asking any questions if you have them, because we're going into our last section here. Year-round tax prep. It's a lot to do. It's a lot of work. And this is why I super recommend keeping up with bookkeeping all year round. I keep talking about my last presentation, but it wasn't really, I think it was a good overview of the different strategies that I have for doing bookkeeping all year round. Because if every year you're doing your taxes like it's a new activity and, oh my gosh, I don't remember how to do this and where's all my numbers, where's the information, it's never going to get easier and you're going to dread it every single year. And there's a couple of key points that I like to remember. This is a big one that you kind of don't realize it's how much of a pain it is until it's not accessible. Maintain access to your CRA or your Taxus accounts. That's that provincial sales tax account. It's such a pain to get your passwords, to try to figure out your username again. It's so painful. And being on the phone with CRA during tax season is really hard to do. Go in now, just make sure you have all your login. It's super important. You're going to have so much information that's there. The next is know your bookkeeping system and where you're going to find things. Where are you keeping your receipts? Where are you tracking your income? When you pull all of this stuff out for income tax time, that's why it's so important that we're doing our bookkeeping. And then the last point, you should prepare yourself for the possibility of owing money to the government, either through your income tax or paying back your sales tax that you've collected. There is a possibility that you could get a rebate as well, but it's really important that you do your bookkeeping so that you know where you're at. Just as an example, these are the federal tax rates for this year. The first two are sort of what I focus on for musicians because I think that's the income bracket that a lot of us are in. So you are taxed 15% on the first $50,000 that you make. After those $50,000, well, it's actually $50,195. After that, you're taxed 20.5% on your income. So my recommendation is that you keep in mind that 15 to 20% of your net income should be saved for tax time. You might have to pay that back. And 15 to 20% is just a nice safe number. I mean, do I do this? Do I have money in a savings account ready to go? No, I don't. But I do my bookkeeping all year round. And so I know the number. I have this general sense of an idea. You don't want to be hit with like a $6,000 tax bill and you have no idea why. I have some last key points to all of this as well. More key points to remember. I like point form here. When we're talking about sales tax, you should register when you need to and not after, because there are penalties for paying late, just like there's penalties for paying late on your income tax. Register for sales tax. Talk to a professional. And this is my next point. Outsource if you need to. Consult someone if you need to. Keep asking questions. keep as much information as you can so that when you do go to a CPA or a tax professional, you can, you have a little track record to show them. You have information about your expenses and about your revenues. And of course, the last point, file your taxes. Just do it. It's a pain and it might seem really stressful, but hopefully after these 2 sessions, it feels less daunting and less convoluted. So that's my big one. Just file your taxes. Don't leave it for 5 years. And I know that's easier said than done, but also know that if you have left it for 5 years, you'll be fine. You're okay. Get some help, consult with someone, and you'll be able to figure it out. So what are we doing for time here? We're pretty good. We got 10 minutes. So once again, this is my contact information. My business is called Tonic Financials. I'm Catherine Kerr, and you can reach me by email at Tonic Financials on Facebook and Instagram. I'm not really active on social media because I don't like using it, but I will answer your messages if you message me there. And yeah, thank you for tuning in. This has been sort of a crazy day. I still see that it's like really blizzardy out there. So hopefully everyone's staying safe and warm. And I think we have time if we want to have any last questions. And maybe Alex can jump back on with me too.
It was good.
Oh, there we go. Thank you.
This glare on my glasses.
I really hope that wasn't, as cold and dull as the blizzard. But it's a hard topic to break down. So.
No, it's good. It's definitely a lot to hear, but when it's delivered in like a nice, calm, assuring format like that, like it doesn't have to be like a really rough experience. And that's what I really gained from the discussion as a whole. Like, it's not something that we're ever going to be pumped to do necessarily. And it's not going to be something that is going to be as pleasant as, say, going to get a massage or something like that. Yeah. Spa day, probably not, but super good to do and not that bad. And you probably you'll feel like you earned your spa day or your massage after you get it done. So there's that.
And honestly, if you're doing, if you're finding as many expenses as you can and you're doing your bookkeeping, a lot of musicians will be getting rebates. Sometimes we're just breaking even. Yeah. So I really hate to see when musicians take their book, they think they're taking whatever, here's a pile of receipts, I don't know. And they take it to like H&R Block and all they do is just say, you made $40,000 in music income? Okay, we'll write that on the first line and now that's the taxes you owe. It's like, there's so many other expenses that need to be taken into consideration. We pour so much of our personal money into music. Like what you were mentioning, Alex, on the last presentation, you buy so many computer plugins, software updates, all this stuff. And if you don't have that on your taxes, which I don't think you had,
no,
it's not counting against your income.
See?
Yeah.
Why didn't I talk to you sooner? I'll get
now
it.
You're talking.
Now I know. And this is good. And like, it was really good. The participation was great. People were asking some questions. Mm-hmm. I definitely encourage everybody to reach out to Catherine at Tonic Financials and make sure that, even me, like I was like, yeah, let's set this up. And I learned a bunch of stuff. Again, like I said last week, half of it was for you guys, but the bigger half was for me to learn stuff like this too. So it's super valuable. And we're definitely going to stay in touch. This is a perfect day. If you guys are at work, and if you are at work and you didn't get a chance to check it, it's going to stay up on our YouTube and our Facebook. If you were at work and your employer was like, yo, go home because you're going to get in here, and you missed part of it over lunch, then you feel free to make sure you watch it. Check out Catherine at Tonic Financials. Feel free to hit us up at Manitoba Music, and we can redirect you back to Catherine as well if there's anything going on. And this will definitely not be the last time that you are running into Catherine through us, because this is a great resource and we want to make sure that we keep on using it. All right.
Good. I see one question. The last session was recorded, and so it's on Facebook, on Manitoba Music's Facebook, or on the YouTube channel. So you can watch that last one. So yeah, I see someone might do their budget today. That's awesome. I love spreadsheets. If you're a spreadsheet person, I showed a really nice example of like just a spreadsheet to track your expenses and your revenue on the last one. So yeah, good luck with your budgeting. And like everyone said, if people have questions, just email me.
Mm-hmm. No days equal budget days.
Yeah, I don't know if you all heard some ringing bells in the background, but my dog rings bells to go outside, and she's been ringing her bells this whole workshop. So I feel bad. She was like, "I want to go out there." Yeah.
It just sounded like reminders that what you were saying was important.
Yeah,
like,
that's good. Ding,
ding, ding, ding. Like, okay, yes. I thought that was just going on in my head. I didn't know that was something that everybody was experiencing.
Yeah, I don't know. I was wondering if people could hear it. It sounded probably like Christmas bells, but
yeah. It just made everything sound that much more important. So that was great. Like, oh, write that down. Oh, that too. It was great.
Oh, that's good. I'm glad.
All right. Have a great rest of your afternoon. If you haven't gotten out outside the house to do whatever you need to do, hopefully you can get it done in the next little while. Stay safe, and I hope to see everybody on the flip side of the blizzard of the decade.
Yes, thank you again for having me, Alex, and to Manitoba Music.
It was wonderful. Yeah. All right, everybody. Have a great afternoon.
Bye, everyone.